Okay, everybody, my slogan is if you're coming to your charts and you don't know exactly what you're looking for, that is simply gambling. You need to know exactly what you're looking for by the time you come to your charts. So today I want us to look at some beautiful trades that actually happened this week. This was one of the best weeks by far, and I'm going to explain a lot of things. I believe it's going to be an eye opener. Rule number one, we are looking for a trend day, as you can see here. What is a trend day? I told you we are looking for a day that trends, okay? A day that trends, so that the following day we find this opportunity that gives us a buy low opportunity. This is a buy low. They drop prices so that they can buy, and then we need our opportunity all the way to the top. I've already explained this, okay? However, you do this a night before on a 1 hour time frame. That's why I always tell you, if you don't know what you are looking for, you are gambling. You need to know exactly what you're looking for. How do you know? You do your analysis a night before, and when you find a trend day, obviously the following day you are going to be waiting for what? For a retracement to the downside, okay, or a pullback to the downside. It's very easy, guys. Some days when you come, you'll find that they're already gone. It's okay, let it be, okay? What we are looking for is a day that actually pulls back. If they don't give this opportunity, obviously they did not give a buy low opportunity, okay? Because we're not gonna be buying high, we want to be buying low, okay? And what is a trend day? Because I told you, not any day is a trend day. Let's say, for instance, this was a Friday, right? On a Friday, prices did something like this, and they came and closed here, right? And then the following day, on a Monday, let's say now they did this. One thing you'll realize over here is the fact that this day made a high, okay? This is the high that was made on a Friday, and this is the low that was made on a Friday, okay? So what did they do? When you look at this, you realize that they came and broke the high. Okay, they broke the high. So this qualifies to be what? To be a trend day. Okay, some days they will break and eventually go back in. Let's say it's just a pin. We don't count that as a trend day. We need a day that really trended. Okay, really trended. Although some days they will trend and then come and close inside. If they really trended, say maybe there are 2 or 3 1 hour candles that closed above this high, then that's a trend day, okay? Even if they can actually come back and close somewhere here, okay? So we still count that as a trend day, okay? So this is a trend day, a day that violates the previous day's low or high, depending on the direction. If it's going up, obviously it will violate the previous day's high. If it's going down, it will violate the previous day's low, okay? So this is what we call a trend day. Let me just show you something on the chart quite quick. If you look at this day over here, one thing you will realize is this day did violate Friday's high, right? This day violated Friday's high. I told you some days they will break to the downside, but look at this. You are doing your analysis on a 1 hour time frame, which I have opened here, okay? So what you see right now is the fact that, okay, they just stopped hunted down, but at the end of the day, they came and broke Friday's high. And for me, I have this indicators right here, which are black dotted lines. Guys, you can just simply search for yesterday's high and low indicator. You'll find these lines, okay? So look at this. This is the high, okay? It has been violated, and they really did go all the way up. And even though they came and pulled back, but they did go all the way up. Okay, fine. Let's now compare this day with other days. Let's compare it with this day, okay? If you look at this day, one thing you realize is this day did not really violate. Yes, of course, they came and pinned through the top. I told you. It's very important to know if it is a real breakout or just a stop hunt. In this case here, they did not give us 2 or more hourly candles above the high of the previous day. What did they do? They just came and pieced just to stop hunt those who entered here, right? Came pieced and they went down. So this day did not violate any day. So if you look at these 2 days that I just showed you, this day over here qualifies to be a trend day, right? However, this is not a trend day. Why? Because it did not violate any region, okay? As I've just showed you, the high is intact and eventually the low is still intact, okay? So on this day here, that's the only day we'll say we had a trend day. I believe now you understand what a trend day is. Okay, now we are coming to rule number 2, where we need a reversal day. Remember, I said we need a day that trends, and then the following day we need a reversal, okay? This reversal must come back to key levels, and then our opportunity is to take it all the way up, right? Don't forget that. So what you do is Since we are just coming from a trend day, you can write USD it gave a trend day. What I usually use is different colors. I will say if it's a trend day to the upside, I'll just use green color, and if another asset gives me a trend day to the downside, I will use a red color, so that I will be able to know the following day that okay, USD is actually might give me an opportunity to the upside. So I use different colors, but you must make sure when you're analyzing a day before, you actually document this. So now that we have a trend day, what are we looking for? We are looking for a reversal. This is very important for you to know. We are looking for a reversal. The following day we are looking for a reversal. Why? Because a reversal gives us an opportunity to actually do what? To buy low. Because you already know it's either you buy low or you sell high. Those are the two ways you're actually gonna make profit, like in any other business. So in this case, we want to pull back to key levels. What are the key levels? I think I also have to explain them right here at this moment so that nobody gets confused. You see here, we are obviously gonna have the high. Let me put the high in place, and we are obviously gonna have the closing price, which is gonna be here, and we are actually gonna have the low, which is mostly gonna be here because it's the low of this day. This is the closing price of Monday, and this is the high of Monday. So we have these three levels. These are part of the key levels because some days they are gonna bounce on the closing price and then continue up. Some days they'll come and bounce on the previous day's resistance and supports. So in this case here, let me just show you additional levels because I've already shared these things. If you look here, they came and bounced here, right? So this bounce is actually another level, and because again it's the high of Friday, we can also project this high through because most of the days they are going to react on it. Don't forget that we can still project the high of Friday through or the closing price of Friday through because some days they are going to react on that, and you'll be coming on a Tuesday. However, you'll forget the highs of Fridays. They are still key levels. Another key level is here. You see they went all the way up, they came here and pulled back. In other words, they got support here, so this is another key level. But if they break the low of the previous day, the setup is invalidated because we don't expect to get a sell low when they have violated the low of this day. So if they violate the low of this day, just to be safe, ignore it. So the most important thing is always wait for what you are looking for, which is this day. Some days you're not gonna get it, it's fine, let the day pass. You're not always expected to open in executions every day. So let me go to the charts and show you this quite quick. So yes, of course, we did say on USD we got what? A trend day. So let's look at our levels. Remember, we are on what? We are on a 1 hour time frame. The first level we have over here is the closing price. As I say, this closing price is a key level, and then another level we have is this one. You see, this was the closing price of, this is the closing price of Friday. This is another key level, which is a high of Friday. You just have to pull these things through, but the best way is to go to a smaller time frame, say maybe a 15-minute time frame. When you are on a 15-minute time frame, that's where you're going to see this thing clearly because you can see this is where the indicator is. As I just explained to you, sometimes it's very important to project these days through. So this again is another important key level. Just bring your boxes, pull them through, and then where's another key level? This is another key level. Why? Because you can see this is where they got support. They came and bounced there, and if you look carefully again, you'll see that we have this pin that actually did something like this, and then we had this level over here, which is Friday's low. It can still be an important key level. However, if they come and break yesterday's low, the trend day's low, it's completely invalidated, so we do nothing. So what do you do? Because this was a trend day, the following day you're expecting prices to fall so that you can buy them all the way up, and we know that this is the first region for our TP, and when it hits here, I told you if you have a magic key, you can allow it to lock halfway, profits halfway for the position that you are actually gonna allow to run through, because most of the days they'll come and close high. However, there are days like this when they'll just come and hit the high and then reverse, so you just want to be safe in any instance. One will take profit here, and the other, if you have magic keys, you will just trail it to halfway, and if they come back, they're obviously going to close you halfway, which is still a small profit. However, there's another profit that closed here. Okay, that's more about management, a topic of another day, but I believe I did touch on it here and there. So this day we are waiting for prices to do what? To pull back. We want to see how they behave on this level, or they go up, they go up. You see this candle, it's just a pin, so obviously you do nothing. Then they came down, now they're below the closing price. What are they doing? Obviously they come and bounce at the closing price and they go down. We are not selling on this day. Why? Because obviously we want an opportunity all the way up, unless they hold the closing price the entire day, and during the US, that's when we can sell. But at this time, London session is still too early to be selling, so we want to see what they're gonna do. When they surpass this first level, we delete. We want to see what are they gonna do on this level now. As they pass it, we delete. Now we want to see what are they gonna do on this level over here. As they pass it, we delete. Now we come into a important key level. This is a 15-minute time frame, and you'll have 50-minute or 5-minute open. But when you look at this carefully, now what do you see? You see they come and give a pin here, and now they start playing on this level. They start playing on it. They never go down again. Like for instance, if you look at a 5 minutes, you can clearly see they are just playing on it. So this is what we want to see. The moment they try or start holding a level, that's when we go to the next step. We are actually going to be paying close attention to what happens at this level, right? Because that's where, let's say, they started holding the level and not actually breaking it. Okay, so what do you want to see here? Let's say for instance we got this pull back to a level, and instead of doing something like this, going all the way down, let's say they start doing something like this. Okay, this is where they pull back, and now they start holding this level. They are not letting it go. So this is an area of concern to us, right? This is an area of concern. So what do we want to see at this place? We want now to pay close attention to chart pattern or candlestick pattern. Okay, so here on different time frames, you're going to see different things. Let's say on a 1 hour time frame, you might see something like a very big red candle going down, okay, and then instantly or immediately followed by a very big green candle going up. So if you find something like this, this is railway tracks, okay, railroad tracks, okay. So this simply means they are sending people down, but immediately they come and go all the way up. So everybody who sold is trapped and is obviously at a loss, because when this candle closes here, everybody who took an execution on the close of this candle is actually losing when this candle closes here. So this is a railway track. Sometimes you're gonna find something like let's say for instance they give you something like a red candle, big red candle going down, and then here they come and hold the level. They give you like this inside candle. I've already explained these things, right? And then the following candle is something like this. Okay, so when they give you something like this, you know this is a very powerful candlestick pattern. Okay, it's a very powerful candlestick pattern. So on a 1 hour, you might find this, okay, and then on say maybe on a 15-minute, you might find something like this. Whereas on a 5-minute now, you might find something like this. On a 5-minute, you might find something like a rectangle, okay, where they are playing inside a rectangle. So what is your job? Now you just have to observe carefully, because they're telling you you don't want to go down. Remember structure. I explained market structure in detail, okay. Let's say they start playing somewhere around here. You are just observing. On a 5-minute, you might find something like a huge breakout. You don't take it. You wait for the retest mostly, and then here they're going to give a very big beautiful candle over here, and this is what we take. Okay, this is what we take. However, on a 1 hour time frame, you might find something like this, because obviously it's a smaller time frame. There's going to be all of this is going to be inside here, okay. And on a 15-minute or a 30-minute, you might just find here, because obviously a 5-minute has more candles than what, than a 15, and a 1 hour has more candles than a 15. Okay, so on a bigger one, you're going to see something less. Okay, so the key point is we want to see what is actually happening where, here. Okay, here, if they start holding the level, that is our area of concern. If say maybe on a smaller time frame, you find maybe a 5 minutes, you find a rectangle like this, you wait for them to break, pull back, and when they give you a bigger one, that's the one you take all the way up. Okay, so let's go to the example we just mentioned here. Okay, as I said, this is our area of concern. Okay, why? Because you can see the last time they hit this level over here was with this line over here. Okay, already you know why this is our area of concern through the steps we've already gone through initially, right? So this is where they hit and they start playing. They never want to break this. Okay, so if we go to an hourly time frame, let's look at an hourly. On an hourly, you're obviously going to see something different. Okay, here we see something like railway tracks. You see, this is a railroad track, one big up, down, one big up. Okay, so everybody who chased this one, maybe executed on the close of this one, is literally trapped, more especially because this has just pulled back to the top and now it came crashing down. So there are people who believe like this was a pullback, now it's going to go crashing down. But no, For us, we understand what's happening in this case, so we were just patient waiting. Okay, so if you use this tool over here to split your charts, you can have 1 hour, 15 minutes, and 5 minutes, okay, or even 1 minute if you understand it better. At this point here, you already know what you can expect on a higher time frame. And when we come to a 15-minute time frame, this is our area of concern. We want to see what are they doing at this area here. Okay, so in this case, if we go to a 30 minutes time frame, what are you seeing on a 30 minutes? Exactly the same thing I drew for you, right? Big. This one, the color doesn't really matter, okay? And I told you in my recent one that this one obviously is important. However, the size, which is actually whether it's breaking this one or not, is not important. But the psychology behind this is crucial. You see, on a 30 minutes, let's go to a 15 minutes. On a 15 minute, we see something interesting. Look at my black line. Look at my black line above, black line below. What do you see? Triangle, right? Yes. And somebody will say, but this triangle is not that perfect. Yes, this industry will mostly not give you perfect things the way you expect them. This is a triangle. You can see this is supposed to be an area, not a line. Hence I said most people actually spend most of their time figuring out how to draw perfect lines, which is not important. The important thing is to understand that this is usually an area. As you can see on this gray line, it's only bouncing here. Okay, and now let's switch to a smaller time frame, which is actually 5 minutes. Look how perfect this is. Look how perfect this is. You see, this is so perfect. Okay, look at this. Look at this, the same candlestick we spoke about, one going up, the smaller one, then this one, and they give us an engulfing one. Okay, now we are coming to an important part here. Remember, patience is the key here, and sitting on your hands is the most important thing until the opportunity is so obvious to you. Okay, so now we are coming to a crucial point, which is actually an engulfment. Okay, let me pull this through that you can see. Now we are coming to an engulfment inside the 21 EMA. If you want to add another position, remember I told you if you want to take a lot size of 2, just divide it into 1. So you can take one when it closes inside the 21 EMA, and then you can add the other one when it closes inside the 50 EMA. This helps you when you are wrong. If you are wrong, they're gonna only hit this one and you're gonna lose half of the size you're willing to take. And by the time you take this one, obviously you are moving this entry to break even here. So I mean, the first entry will be at break even. So what I'm actually saying here is simple. It's something like this. Let's say for instance, yes, they pulled all the way back and they started playing, say maybe they started playing here a rectangle, because the patterns vary. I've shared a lot of patterns with you on our playbook. If you look at this playbook on this middle one, which is the indice strategy, I'm going to record another video later today because wow, this one I've just been killing trades for the past 2 weeks. So I'm gonna record another video strictly for indices, which is the strategy in this middle PDF here. If you look at the first PDF, these are actually 2 strategies for currencies, and this one is the one we have right now, the one we're explaining. But if you look at the middle one, the one for indices, I've given you all the patterns you'll ever need. Okay, I've given you all the patterns and I've explained the evidence candles and how to wait for the evidence candles. Okay, so you have everything you need. Okay, all the strategy I use is on this playbooks as well, because these are the playbooks I use for my personal entries every day. Okay, everything I do is based on that. Okay, so let's say for instance you realize that they gave you what, a rectangle. Okay, what are you gonna do? Obviously you're gonna wait. Okay, because that's our job. At the end of the day, we wait. So let's say already I've explained different kind of chart patterns and candlestick patterns. So to be safe, you wait for a breakout here. Why? Structure. Remember we spoke about structure, where if they are going down, they're going to do something like this, and when they are ready to reverse table, they'll do something like this, where they'll give you a break in structure and then come. Now they're changing the directions. You're going to see this first on the structures, and I believe you already understand structures. Okay, I told you to understand key areas. I've just explained a variety of key areas with you in this one. Okay, so when they break out here, remember you are waiting for a pullback. A pullback can come and bounce here, or it can come all the way back, and then here, this is where we are waiting for a big candle. Okay, hence here I wrote engulfment inside the 21 EMA. This is where the simplicity comes in. Okay, this is where the simplicity comes in. Why? Because obviously this is gonna be inside the EMA. You see, this move is going to be inside of the EMA, and mostly the bounce is going to be on the EMA. And as I said, if you want to add more size, you can just take one here, which is one, and then as they are going, they will go, and then at some point they will pull back to, this time around, to let's say the 50 MA, which in this case might be somewhere around like this. Okay, something like this, and that's where they are mostly gonna bounce on the EMA. But again, our entries are governed by the big candles here. Okay, we want to see an engulfing one, so this is where you can add another one. Okay, so in this case, when you took this one, your stops were here. If you were wrong, they were just gonna close you right away, meaning you're only gonna lose half the position. Okay, however, when they do this, they come back and bounce on the 50 MA, and this time around they give you a big candle. Now this is confirmed, the move is confirmed. So when this candle closes, you can take it and bring your stops usually from here to at least break even. In this case now, one size is free. Okay, it's safe. Okay, one size is safe, and this is showing you that they are leaving. So this is how you manage it. You add more when you are winning, not to actually add when you're losing, as everybody is doing. No, we don't do it like that. We add when we are winning. Okay, so this is just management. I'm not talking about management today, but I wanted you to understand this. Okay, so let's go to the charts quite quick and see what this means. Okay, if you look here, I'm on a 30. Let's go to a 50-minute time frame. Remember, you have opened all these time frames at the same time. This is the first candle that closes up, a big one. This is a big candle that closes up. Let's bring in the 21 EMA. Let's bring in the 50 first. You can see this is where the 50 closed, okay, after pulling back. But let's bring the first one, which is actually our 21. Okay, this is an exponential moving average. Okay, so when you look at the 21, what happened? The first one closed inside. Okay, this is the first one. This is your first one. If you're putting your stops, you can put them. It's not too much, guys, honestly. Here it's not too much. If you're taking this one, you can see this is 29. Usually we use 25, so 25 is somewhere here. You see this pin here. Let me just delete this gray line here so that you can see. You see this pin here. You can just put it below it, okay, because mostly if they come and violate it, you are wrong. Okay, but if 25 is below here, I suggest putting it here, but don't make sure it doesn't go beyond 25. Okay, so look at this, it came and closed inside, then they went up, they came back all the way down, and then as they closed inside, that's where you can take another one. But you're gonna see this clearly on a smaller one. Okay, if we come to a 5-minute time, you see, I love this, the candlestick pattern that I just shared with you. Look at this, how powerful this is. They give you red followed by this inside one and then this big one. But the most important thing here, if you were taking it on a 5-minute time frame, you're going to take it on this one, because obviously this is the first big one that closes outside of the pattern. You see, it's a big one, and it's inside what? It's inside the 25. Okay, it's inside the 20, it's inside the 25. Yes, it's inside the, I mean, it's inside the 21. You see, it's inside the 21. However, they go and then they come here and bounce, and as you can see, they give you another big one here. Okay, they give you another big candle here. So this is confirmation. If you doubt it, you can wait for something like this one. Okay, something like here. The moment they actually surpass this region here, that's where you can take another one. And of course, we are now at this point inside the 50 as well. You see, we are also inside the 50. So that's where you add, and you can move your stops from here all the way to here. Now you are at break even. Okay, if they come and close you, obviously it's okay, because you're only losing half. Okay, but most of the time this will be just going all the way back up. So this is where you actually employ what we spoke about. We are looking for this opportunity. When everything is fulfilled, we want to take it all the way back up. Okay, and if it closes like this becomes a trend day again. So the following day again, we will employ the same thing, okay, for an opportunity up. Okay, however, as I always say, you might find some days, let's say this is the high of this day, okay, and then when you had a trend day, because obviously this is going to be the trend day, right, because they violated the high of the previous day. So some days when you're looking for something like this, they tend to give you something like this. Now they are playing on what? They are playing on the high. Okay, this tells you they don't want to go higher. What you do, you can identify a rectangle here and just be patient, okay? Wait to see what they do. Sometimes they'll come break here, retest, and then they collapse, or else they can still go up. But be careful when they don't give you this drop, because this is a buy low. But when they do something like this, mostly it's going to be a sell high. So you must be able to identify between a buy low and a sell high. And the high is actually going to help you with that, because obviously if you are expecting prices to pull back down, or to pull back down like this, but at the end of the day they just tend to hold this price here, you know that they are planning something. Look at this day. This day didn't violate anything, right? This day never violated anything, right? However, let's look at the following day now. What did the following day do? Yes, it broke to the upside, but let's look at what it ended up doing. Okay, we are on an hourly time frame, right? It actually violated heavily the low of the previous day. So since they violated this low, what are we anticipating the following day? We will mark this one as trend to the downside, and you write it in a book or whatsoever you'll be using, so that the following day you know exactly what you're going to be looking for. So when we came on this day, I told you some days by the time you come to your charts they will be gone. So if they are gone, it's okay. We missed this one, and besides, it's not like we really missed. Why? Because we were actually anticipating something like what? A sell high opportunity. Okay, sell high opportunity, where they pull to the upside, maybe to this level over here, because you can see it's the closing price of this day, or else maybe to this level over here, because we can see there was a lot of support here. And we'll only see this if we go to a smaller time frame like this. You see, when you go to a smaller time frame, that's where you're gonna see more area. But in this case, what did they do? They just shot straight to the downside. Okay, what do you do? Nothing. So on this day, it was on a Tuesday, there was nothing to actually do. You just look for other assets that gave an opportunity. Some days you won't get anything, it's still okay. As Warren Buffett always says, one advantage with speculators is we only open when we want. We are not forced to open any position, and that's a huge advantage. If we don't see anything, we don't open anything. So let's come to this day again. What did they do on this day? Okay, I want to show you on a 1 hour time frame. We'll be analyzing again. The fact that we didn't get an opportunity doesn't mean we're not going to analyze it. We are still going to analyze it the following day. What did they do? In this case here, they broke what? The low. They came and violated the low. If you look at this low over here, it has been violated. Okay, so this again still qualifies to be what? To be a trend day. And then what are we looking for the following day? We are looking for sell high opportunity. What did they do? I told you, some days the pullback will happen on the day itself. But the bottom line is, when you get a day like this, yes, it might come and close here, but the bottom line is they violated down. They broke to the downside. This is a trend day. Unless the following day they just keep going up and they violate the high, that's when it's invalidated. But as long as that hasn't happened, this is still a day that violated the low and actually is a trend day. Okay, so never allow this to confuse you. Okay, so the following day, what are we looking for? A sell high opportunity. What do they do? Okay, the pullback happened on the day. Obviously, we're not gonna execute anything on the day, but we are still paying close attention to the levels, right? We are still paying close attention to the key areas. If they break this high over here, it's all invalidated. We are gonna do nothing, right? Yes. However, which other level we have? We have this level over here, which is the low of this day. It's the low of Monday. The low of Monday, all right. However, this is combined with what? With the closing price of this day. The closing price of this day. And those are the two levels we have when we are coming to this day. What do we look for? We got the trend day. We got the pullback we anticipated, right? And now we want to see what's happening. Let's see. They come here, bounce on this one. They come and bounce. Okay, they break this area over here. However, we have this, we can draw a line here. We want to see if there's going to be a follow through. The fact that they just broke to the side, and remember, look at what they are doing. Let me zoom out. Look at what they're doing. They're just holding this level. They give us two 15-minute candles that are going nowhere. And then at the end of the day, we also have another level here. I took this one as well. However, we had news, so for me I took roughly something like 100. This was the biggest candle, and they just bounce on the closing price. So you see, rectangle, the biggest one, breakout. This is what you take. Why? Because it's inside the EMAs. It's inside the 21st. For adding more size, you can add. Although some days you won't get the opportunity to actually add more size because they will just collapse. So I trailed mine just before the news. So they came and kicked me out somewhere right here when I trailed before the news. So I exited this one with 100 and something. But it was so easy. On Newsland, we can see, guys. Okay. This one, yes, it is a trend day. Okay, it is a trend day. that clear because one candle and there was no other 1 hour candle that closed. Okay, so this one I just ignored it. Okay, so I waited for a clean trend day because you can see this one really did violate the high. This one really did. This one, like, it was this could be a stop hunt, but this one you can see they came bounced and then they went all the way up. So this is the day when they really violated the high. Some days you must just make decision and take what you are more comfortable with, because at the end of the day comfortability is key. So this one was a trend, and then the following day what did they do? They came all the way back to where? Do we have a level here? Yes, we have the high of Monday. Okay, I told you you can just draw this areas through. Okay, and when you come to a 15-minute time, you'll see more levels. We had another key level here, but at the end of the day, what did we say? You have key levels. Okay, you have the closing price, but they just went below. They come and retest that. Okay, they went down again. We want to see what are they doing on this level here. If they keep going down, it's fine. We're gonna delete this, and our next level is obviously somewhere here. You see, we got this level here. If they surpass this one, we had another one here. If they come and break this one here, it's invalidated, right? But in this case, they did not really surpass this one, so fine. We want to see why are they holding this level and not going anywhere. What do? They give us a W, and then after that W, they give us this. This half Batman. Remember, if you look at, for those who have the playbook, if you look at the playbook in this middle PDF, I shared all the patterns. Go and look at the half Batmans. Look at all those patterns and make sure you master them, because I gave the half Batman. So you got the half Batman, but you can still go and do a Google search about the patterns. It's just that on the playbook I gave my entire strategies. But look at this. What do? This is half Batman ear here, and then they start consolidating, and then boom, the big engulfment you are looking for. In this case, obviously guys, you can't say one position is holding for 10. If it's like this, you can just hold till the close and just manage it a little bit stricter. Okay, so if you look at this on a 15-minute time frame, you'll see this. But if you look at this on a 5-minute time frame, this is where it appears very much perfect. Remember, we spoke about something structure where I shared with you when it goes down, it will give you something like this, but when it's ready to reverse, that's where they will come and break this high, and now they are breaking the highs. So the same thing you see here. You see here, they make a low, they make a low, they make a low. Now what are they doing? They come and break this high. Mini head and shoulder. Okay, we have a mini W, but still you must take something that you're comfortable with. And then we have a triangle, but this is a half Batman. On a 5 minutes they gave a beautiful triangle, and you wait, and here's that big candle. If you bring in the 21 EMA, you got it. This is the 50, and again, if you bring in the 21, 50 is for adding more, right? Yes, but you can use the 21 again. You see, this candle is still inside. Okay, the 30-minute time frame. Now you know. What is this? Where they give you a red one, then this inside one, and this engulfing one. What is this? This gives you assurance. If you're looking at the smaller time frame as well, you already know that this move has already confirmed to you. Okay, so this is an easy one all the way to the upside. There were many last week, honestly. It's just that I don't want to make this video way too long. But guys, in a nutshell, this is all we are looking for. We are looking to take the continuation in line with the trend we have. We get a trend to the upside. We want to see a pullback, and